We have Oliver Slope with us here this morning. He's with Blue Line Futures, and he's on the outskirts of Chicago. Oliver, good to visit with you here on a Monday morning. Lots of excitement in the grain trade. All of a sudden, it seems like everyone's kind of interested in this entire complex. What happened?
Yeah, it really does, and certainly a lot better spot than the Bulls were in on Friday, or even the Sunday night open for that matter, when we saw markets open up quite a bit weaker last night, kind of rebounding this morning. And I think a lot of that is probably on the back of wheat kind of being the leader here. I know that funds have had a massive net short position for quite some time now, and it is evident that they are starting to cover that short. Looking at Friday's commitment to traders report, we see that funds are still short about 116,000 contracts. So that was about a reduction of 9.5 thousand contracts, and 8,500 of that was short covering. And I think once we get out above some of these technical levels, if we are able to, you'll see additional short covering propel this market higher ahead of that deadline for the Black Sea grain deal, which as of right now is kind of in limbo, and it sounds like it might not get renewed. So that's going to be something to keep an extremely close eye on. That deadline is the 18th, and have big implications on not just the wheat market, but also potentially spilling into corn and soybean price action as well.
So what level would you consider would be a bit of a tripwire to get those funds to flip that short position? What would it have to rise to on Chicago wheat, for example?
Well, 665 to 670 was the high for May 8th. That's the line in the sand that we're keeping a close eye on. If we get out above there, $7 is psychologically significant, but really I think mid 720s would be the target. That was the highs from March and April, and I think is fairly feasible considering where these prices have been. And looking at the KC contract, we're making new highs on the year, and so that's the leader of the upside. And if that continues, I wouldn't be surprised to see Chicago play a little bit of catch up and hopefully continue to grind higher, and hopefully help that corn market as well. Now, the corn market is a little bit different of a story. Obviously, weather is going to have big implications going forward. That new crop December contract, I'm still a little bit skeptical on, and I think rallies up towards 550 would be an opportunity for producers to consider looking at hedges again.
So you're looking at 550 on that one. Okay, that answered that question. We'll take a quick break, and Oliver will take a look.